All right, we are back. Let me see if we're live. Good this afternoon to everyone watching. My name is Silas. This is Silis Trades. I'm gonna go over, as always, a recap of today's trade. It is Monday, July 20th. We had a nice little 300 something dollar day. Share my screen. But we're gonna keep moving. I'm not sure if my connection is stable or not, but I want to show you guys the trade I took today. There we go. Here on the Dow, I'm usually trading either NAS or gold, but I've been uh, moving a little bit more towards the Dow. I like the volatility of it, and I like the price action as well, which is the most important thing. So I'm gonna show you guys the trade we took today. Like I said, if you're not already, feel free to join the Discord. I was a bit busy today, so I didn't do too much involvement in the class. But as you can see, we did 311 here on this Dow trade. These sales here, we don't have much of a volatile news week at all, for real. So I was expecting some clean price action. On NAS, you can see price action did become a lot more cleaner here. What time was that? 11:30. Like I say, I would say there's 11 o'clock flip. Like I say, if you're not part of Discord, feel free to join. I've got these setup templates, workflow templates, and morning flow templates to get you right in the morning that I created myself. I say that because of what I'm seeing here at 11:30 on Nasdaq. I always say, let me see if I can find it here on this one, the 11 a.m. flip, which is between 10:30, 11:30 price intend to find true direction. But we didn't take this sell on Nasdaq today, which I just was monitoring. But this was the trade that we did take, sales on Dow. So I'm going to erase everything and show you how and why I got to where I got. So as I said, we have the Dow Jones Industrial Index here, which I've been trading for probably the last couple of weeks. It's been working out pretty well. Um, if we go down the workflow page that I have set up here, we go from fundamental awareness to step one, check news events, high impact. Like I said, we don't have uh any news this week. Show you what I mean. Haven't been using Chrome, so the shit it's not used to me. On here, I've revamped my computer, works much faster now. But as you can see, Monday, not much news. Tuesday, we don't have much. ADP weekly employment change might be somewhat impactful. Well, we don't have too much going on USD wise this week, so I expect a clean price action. So we'll go back to our workflow. Top down structure, step two, then key levels, and then step four is my secret weapon. So we'll go top down structure. I didn't leave 30-minute time frame at all, so I'm not going to leave it now. I'm not going to go from daily to 4 to 1. We can start at the 1 hour. I don't even have them up here on my selections anymore. I just got from 5 to 1. But if we do go with the 1 hour and we're marking our lows and our highs, we see that previously. So first of all, let's understand that with this mindset, true market open hasn't occurred yet, which is at 8:30. So we'll say this is up to 30-minute time frame. So right here, I want to make it red. We're going with this from the red line on hasn't happened yet, right? So we're not. That's when we're going to make our play. Before that, we're making our markups. We're identifying our levels and where price may want to play. So we're not paying attention to anything after the red line. So we're just before it. So we're marking off our highs. We have a peak here. We'll mark that. We can mark this one here as well. We have lows. here. And then we want to make our current highs and lows. So we're on this range here. So we have that low. If we're here at, what time is this? 1 a.m. lows here. You see all these touches. We'll mark that. And any inner highs, and we see that here at 6:30 we had this touch. So we'll mark that. Now let's get rid of this red line. So we've gone down our first 3 rules, pretty much. We're aware of news. There isn't much. Our top-down structure, our daily. Oh, we did our hourly highs and our 30-minute highs and lows. Key levels, major and minor support, which we just did that with the inner lows and highs, which you can mark off a different way if you wanted to say this is. I'm not sure why it's glitching like that, but you can say that this area is your resistance level, and this area is your support. You can make it that way if you wanted to. You can mark it off however you like, but I've simply done it with those lines. All right. Now we introduce my secret weapon. All right. Step number 4, the fixed range volume profile tool, which gives you volume area highs, volume area lows, and the mid-range or POC, which is point of concern, which is also a tool that I use. So we're going to go back to our chart. So we know prices in between our support and our resistance, our support and our resistance. And we have these highs. If price goes above, these highs are targets. If price goes below, we have these lows as targets, right? So, and beyond. So before market even opens, which is here at 8:30, we're going to initiate our fixed range volume profile tool, which if you go over here to forecasting, I believe this is, forecasting, I believe. The forecasting, you go to volume based tools. It's right here, fixed range volume profile tool. You'll want to start at the beginning of the session. You'll take it. You can put it pretty much anywhere you want to. It just identifies that volume within that range that you've selected. So we'll take it. We'll go before 8:30. I'm not sure why it's moving so wonky like this. But with that, it gives us a green line, which is our volume area high, a yellow line, which is our POC or mid-range, and a red line. Did I say you red line to that? Yellow line for the mid-range and red line for the volume low, right? This is probably down here earlier. Let me go a little bit before. As you can see, the line changes depending on how far you take the volume profile tool. But I probably was more close to 7-ish. I believe I woke up at like 6 something and marked it out. Right. Yeah, it was like that. So with that, we take everything we've identified, our lows, our highs, our support, our resistance, and we see that currently at 7:30, 8 o'clock, price is a bit above the volume area high. Our rules dictate that if it's above, we're looking for longs. If it's below, we're looking for shorts. If it's within, we're looking for it to fill, or we're just waiting for it to either break above or below. So with that, we also take into account the volume area rule, which is there's a 70% chance that if price comes into between this green line and this red line, the volume area, that there's a 70% chance it's going to fill it. So with this candle at 8:30, it jumped up initially, tapping this support, tapping this high, previous high, but coming back down into value, which is a bounce. We go here to our bounce setup. We utilize the fixed range volume profile tool, which is the first step. We wait for a break of either the volume area high or the low. As you can see here, we wait for a break of the high or the low. We got that break at 8:30. We're looking for this at open. Got that break at 8:30. Now we go down to the 5-minute time frame. 8:30. We jump up with immense force, but it comes back down and closes right above the volume area high. We can wait 5 to 10 minutes to see where it goes. If we put a little more length on this high here, just so you understand, price did come back into the high, back into the volume area, and then eventually filled it. So at open, when we have the most volume and volatility, that's when we want to make our strike with this initial bounce setup. We got that break. We wicked out 5 minutes after open, back into volume from the top. This is the example we're using because it was a sell, not a buy. If had it done the opposite thing and wicked out at the low, we would have been looking for buyers back into volume. So price broke above at open. 5 minutes later, we're back down below. Another 5 minutes, we're dropping. Another 5 minutes, 8:45, we're below. We're in the volume. At 8:50, we do come back up, but only to retrace back into volume. We tap the support, we tap the volume area low, we break both, and we touch all the lows that we had initially marked up. So how do you take advantage of this? You use the strategy. We broke above. After open, we broke back within the volume. You could have waited for price to hit this mid-range. You could have waited for price to break support. You could have waited for price to break the volume area low. And then there's a 3 different entry points, 4 different entry points, 5 different entry points that you could have taken to capitalize on this trade. You see that several times price has tapped this resistance. So when open occurred and it tapped and did not break and continue, we can think, okay, it looks like we're getting a bounce here. If we would have continued above, maybe came down and tapped here and then retraced above this level again, then we would have been looking for buys, but that did not happen. We broke back into volume, and we can see that thanks to the fixed range volume profile tool. Our markups help tremendously. Even if we didn't have the tool here, just our support and resistance, we could have taken these sales. But this gives us a clear roadmap as to where we can get in, where's the best place to get in, where we can take it, and where we should get out. We have clear targets. You're going to make this your first TP, this one your second, your third, and been done for your day. And we've dropped way below those numbers. So that's my secret weapon, the fixed range volume profile tool, and just clean markups, as well as the POC indicator, which I do utilize, which just shows points of concern throughout price action. I tend to use the volume tool. I just kind of just have that on. It's not necessarily mandatory. It does give an increase in volume, so you can see if that initial direction that you've chosen your bias on is correct. And then the fixed fair value gaps profile tool. I do use that here and there. I'm not an ICT trader, but I do use it as like confluence for continuations on the trade. So as you can see, if I would have gotten for this sell, and we created another fair value gap, like okay, the sell may continue. Create another one. So it's all confluences for the trade, which is sales. So it's just more clues and reasons to like, okay, this is a good trade. So yeah, that's a solid system right there. That's for the bounce. I do also have the acceptance set up for if price was to break above, come back down. This is where you get in for your trade, and then it goes to the targets that you have initiated. Same with if it was to sell. Everything that you need to know is in the Discord. I will be in there heavily these next few weeks. So if you're not already, do feel free to join. That's all I got for y'all today. Name is Silis. This is Silis Trades, and I'll see y'all next time. Hirsch.